And let's talk about Pidilite. They managed to post a decent and a good set of numbers in terms of growth as well as volumes. Let's bring on board Mr. Bharat Puri, Managing Director at Pidilite Industries, joining in with us this afternoon. Thank you so much, Mr. Puri, for joining in with us this afternoon on ET Now. And let's start by talking about your revenue growth, right? That was primarily driven by volume growth this time. What about the value growth? When will we see narrowing down in terms of the gap that we're seeing between the value as well as the volume growth?
See, basically, the gap between the volume and the value is, if you remember, last year we had very high raw material prices. So we've now, as prices have normalized, we've passed on the price decreases to the consumers. So we've reduced prices. That's the basic gap. Volume growths are in double digit. It's about little over 10%. And about 14% in the B2B business, about 10.3% in the C&B business.
Okay, but going forward, what's the outlook in terms of volume growth, and what are the levers that you see for growth going forward?
As we've said, we're increasingly optimistic. I think, barring any unforeseen circumstances, the current demand conditions should continue. So we would keep looking for double-digit volume growth.
Mr. Puri, what's been a concern and, that's coming in from most of these consumer companies is that rural demand, and suggesting that that's not seeing anything of an increase. Discretionary spendings by consumers is something that's seen a bit of a slowdown as well. So, could you give us an understanding in terms of the trends that the company has seen for the urban-rural trend? What are they suggesting for you on ground right now?
See, what we have been doing as an organization is consistently investing in rural markets. And that is something that is paying us dividends. So frankly, across the year, we have not seen any decline or any softness in rural markets. Actually, our rural growth is 1.5 times our urban growth, which is what we want it to be. But please remember, ours is being a category which is dependent upon construction, B, renovation, and C, most importantly, consumer education. Since we've been investing both in terms of educating consumers as well as going far deeper into the rural hinterland. I mean, just this year we have added 30,000 new retail points to our rural network. All of that is really therefore helping us to make sure that rural continues to be a driver of growth for us and not a drag. And we expect that to continue.
But you know what, last 4-5 quarters, we have seen that the growth has been in single digit, but prior to that, there was a healthy double digit growth. Do you think price cuts is the reason for the same? And when do you envisage going back to that double digit growth mark?
It's not mostly completely due to the pricing impact. If you look at our underlying volume growth, which is in our view, the right measure to look at, because, as raw material prices go up and down, we had inordinate price increases a year back. That time our revenue growths were very high and volumes were subdued. To us, we are clear underlying profitable volume growth is our mantra. And that's what we'll be focusing on. And we're fairly confident of achieving that as we move forward.
Right. Just let's get in a word in terms of the exports as well as the international demand as well. Overall, yes, exports are seeing a recovery, but when you're looking at the America business, that seems like seen a fall of almost more than 30% on a year-on-year basis. So what are the international market demand trends that you're seeing?
See, as far as international business is concerned, this is broken into two basic buckets. One is our exports. The second is we have a lot of companies abroad, whereas we have ventures abroad. As far as our overall international business is concerned, you will see that this quarter that is also growing well as far as volume is concerned. The US, in our consumer and bazaar businesses, last year we had taken a decision to actually exit the US from a consumer and bazaar. So this is the remnants of that business. But otherwise, if you look at overall our international business, this is a little over 10% of our sales. It is now also growing healthily.
Sure, but Mr. Puri, before I let you go, I have to ask you a question on the margins, right? Because that was the big surprise that we saw this quarter, whether in terms of EBITDA margins or gross margins, they have been very healthy. The big question now is it sustainable or is there more scope for improvement?
See, we've always guided that in normal circumstances at Pidilite, we will look at an EBITDA margin of 20 to 24%. We're now at the higher range of that margin because raw material prices have been soft post the completely inordinate rise that we saw in the previous year And really, therefore, the reason why for the margin improvement is last year at this time, VAM was $2,000 a ton. It is now between $900 and $1,000 a ton. And that is, therefore, last year, this quarter, we had a 17% margin. A large part of that increase is in the margin is because now prices have normalized.
Okay, Mr. Puri, on that note, we let you go. Appreciate you making time and speaking with us. So that's the verdict. They are investing a lot in terms of the rural growth, and that is what will drive the demand going forward.